Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be taking a deep dive into my position in SCHD. Now, I've been building this position for a couple of years now, and I've been able to amass a decent amount of shares in it, so I want to take a look at how much dividends it's been paying me and how it's performed so far in my portfolio. Now, if you guys are into that type of content and appreciate the transparency, consider subscribing to the channel. It helps me out a ton. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. Now, with that being said, let's take a quick look at my portfolio dashboard. In total, I invested almost $65,000, and we're getting closer and closer to that $100,000 mark, now at over $98,200. Now, a big part of that portfolio value currently is in unrealized gains. I'm up over 50% or a $33,000 unrealized gain. So if the stock market does crash over the next couple of weeks or months, my portfolio value will go down pretty significantly. Now, one thing I will quickly point out here is my yearly income going forward. It's currently expected to be about $1,377 per year, with a big portion of that, as you can see in this graph right here, made up of by SCHD. So let's start by taking a look at my position in the company, and the way I've organized it right now is by my total allocation. So my largest position in the portfolio is VOO, then followed by Google, and then finally in third place is SCHD. Now, believe it or not, I never intended for Google to be a larger position than SCHD, and I think long term it won't be a larger position, but because of the amazing price performance I've seen since purchasing my position, it has actually increased to a larger position size than SCHD. It's now up over 145%, bringing that total position to $12,550. Now, if you guys do want a deep dive on my Google position in a future video, definitely let me know down in the comments below. Now, for my SCHD position, the reason I want to show this screen first is we can take a look at my cost basis. So on average, I paid $25.55 per share, and the current price is $32.40. But of course, my original shares I was buying at way lower than $25 a share. It's just that I've continued to average up my cost basis with my weekly purchases. In total, I purchased over 279 shares, and with dividend reinvestment, I have 306.851 shares, which is pretty awesome to see. Now, what that basically means is I invested $7,130, but with price appreciation and my dividend reinvestments, my current value of the position sits at almost $10,000. Now, sliding over to the right, we can see that my total return is about 40%, which is not too bad. It's gone up recently over the past couple months, which is great, but compared to some of my other positions, including VOO, it is definitely lagging in terms of performance. Now, the reason I do buy this ETF is not just strictly for performance. There's a couple reasons, and we'll get into them throughout this video. Now, one of the reasons which I really like is the dividend income from it. Of course, I do reinvest it, but I think that it's a fantastic dividend growth stock that helps to offer a good amount of diversification in my portfolio. So in total, I've earned $751 of dividends so far. And every year going forward, I should be earning $315, all of which I'm reinvesting back into SCHD to buy more shares. Now, the reason for that, even though a lot of my other stocks I don't reinvest, is because I'm planning on continuing to hold SCHD for the next 5 to 10 years at least, if not even longer. Now, the current yield sits at 3.17%, but because I purchased at a much lower price, my average cost basis is lower, then my yield on cost is 4.02%, and my total allocation, as you can see right here, is 10.1%, making it significantly larger than the next position, which is United Health. Now, while we're on the topic of portfolio holdings and allocation, we can jump to the My Pie section of my portfolio. It's been a while since I've shown you guys this section. I don't use it as much anymore, but I did used to really love this sheet in the portfolio. Now, the main way it's broken down is into my 3 different sections. We have Key to Success, Divine Dividends, and my Miscellaneous section, and each of them have a target portfolio amount, and they actually have a real allocation amount right here. So my Key to Success section is my ETFs. We have VOO and SCHD, and we can open it up to see the individual breakdown. So within this specific pie, my goal is to have about 75% of it in VOO and the other 25% in SCHD. And right now we're actually pretty close with a 76-23 split. Now, compared to the rest of the sections of the portfolio, it's actually a little bit underweight because my Divine Dividend section, which you can see right here, is a little bit overweight at 48.4% instead of the target 40%. Now, in here, we have high quality compounders like Texas Instruments, Microsoft, S&P Global, and United Health. Now, just to cover my last section, we have the Miscellaneous section, which includes stocks that either don't pay a dividend or a little bit more of a turnaround play or more risky. So companies like Amazon, 3M, and Uber. I try to keep this one relatively small. My main strategy is to invest in dividend growth stocks, but I think there is value to investing in companies like Amazon and Uber, which is why I have this miscellaneous section available to me as well. Next, we can jump into my order history section just to take a look at my SCHD purchases, and obviously we're not going to go into every individual purchase, but you can see right here that my first purchase ever was for 30 shares of SCHD at $24.44 each, which was a total order of $733. Now, even though this was my first purchase ever, it definitely wasn't my cheapest. We can even see already right here, there was a purchase at $22.31, and that's in 2023. Now, what I want to note here is that since 2022, I've been consistently buying SCHD, of course, not on a weekly basis back then, but since then it has become much more consistent. With the past 2 years, I've had a strategy of investing every single week, no matter what. So scrolling down to some more recent purchases, you can see right here what I mean. Basically, I've been doing weekly purchases, assuming I don't forget to make that purchase this week. And this year, it's been $50 per week of SCHD, which happens to be a little bit over 1.5 shares per week. Now, I think for the foreseeable future, I'm going to continue doing the strategy of weekly purchases for both VOO and SCHD. It helps grow them pretty consistently over time. It means I'm not just sitting on a bunch of cash in the meantime. Now, in terms of my dividend income for SCHD, I think the best way to visualize this is by taking a look at my dividend calendar. And if you guys have made it so far into this video and you are enjoying it, consider leaving a like. It does help out the channel a ton. So we'll start out with 2026 just to show you guys how I organize it. So this tracks basically every single dividend I've ever received for the year. So we have the first dividend here in March and the next one in June. Now, before we go too deep into 2026, let's hop into my 2025 dividend calendar. So the neat thing is that by tracking it every single year like this, I can see how the dividend has grown over time. So you can see that in 2025, I received $51.51 in March, $59.30 in June, and in September, $63.32, with $70.8 finishing off the year in December. Now, the main reason this has continued to grow is because SCHD has both continued increasing its dividend every single year for the past couple of years, and it's also been reinvested back into my SCHD position to buy more shares along with my weekly purchases. Now, at this point, even if SCHD does make a small dividend cut or it starts becoming a little bit more stable and not growing as quickly, it won't matter because I do make weekly purchases into the company. In 2025, I made $244.93, which contributed pretty significantly to my total yearly income. Now, hopping back into 2026, now we can continue to see how it's continued to grow. I received $71.94 in March, which is significantly larger than the $51 I received last year, and then $76.09 in June. Now, we still have 2 quarters left of dividends and we're already at $148, so I'm certain we're going to beat last year's record of $244. Now, that's enough about my individual position and portfolio in SCHD. Let's take a look at some of the financial and performance metrics elsewhere. So hopping into Google Finance, we can see that year to date, it's actually been performing very well, up 16.84%. And a lot of this performance is pretty recent. We can look at the 1-year time frame. It's up 18.55% with a lot of the rally coming here in late November. Over the past 5 years, it's not up as significantly. It's only up 27.86%, but we have to remember that it also has a 3 to 4% dividend yield, which is pretty strong. Now, hopping into Seeking Alpha, we can take a look at its performance versus VOO, and we're using VOO as a proxy for the S&P 500. Now, first we'll look at price return, then we'll look at total return. Price return only looks at the price of the shares, whereas total return considers dividends as well. So in the past 6 months, SCHD is up almost 14%, with VOO trailing behind about 8.5%. In the 1-year period, it's up 17.78%, which is trailing VOO at 20.61%. In the past 3 years, it's also trailing by a pretty significant amount, almost down half compared to VOO. And in the past 5 years, it's down pretty significantly versus the S&P 500. Now, if we take a look at total return, it is going to change up some of these numbers a little bit. It's not going to be super significant. SCHD still trails in the 5-year time frame, but let's just hop in and take a look. So instead, now it's up 15.56% versus 9.19% on the S&P 500. Year to date, it's up 20%. In the past 1-year period, it's up 22%, very close to VOO. They're basically neck and neck. And in the past 3 years is when it starts trailing pretty significantly, up 50% versus VOO, which is up 78.64%. Now, over the past 5 years, it's still trailing. It's not as bad as the previous picture. With the dividend reinvestment, it's actually a pretty strong performer still, but it's only up 52% versus VOO, which is up 85.36%. Now, if we do take a look at SCHD's holdings, we can see some of the reasons it's been underperforming. It's basically just due to the fact that it's holding less tech companies and less companies that have seen some explosive growth over the past couple of years. Now, both of these ETFs have different methodologies for selecting which stocks to invest in, and you can see for SCHD, the methodology has led it to invest in some pretty high dividend yielding stocks. We have United Health in number 1, followed by Merck & Co, and then Abbott Laboratories. Now, overall, I do think this is a pretty good mix of some pretty healthy and strong companies, especially ones like Texas Instruments, Coca-Cola, and Home Depot. Now, one thing I don't love about SCHD is sometimes it tends to hold too heavy into bank and energy stocks, which is a sector I'm not as passionate about, but it does help diversify my portfolio. The one thing I do really like about SCHD and why I think it complements my VOO holding is because the allocation into each of these stocks is completely different than the S&P 500. Now, before we end this video, let's just take a look at SCHD's dividend summary, which is a big part of why I originally invested in the ETF and why many people invest in SCHD. The starting dividend yield sits at a nice 3.23%, which is pretty high, and it's complemented well by the 5-year growth rate sitting at 7.53%, which is very strong. Now, the one thing I want to clarify is the reason that the growth rate is so high is not because the holdings within SCHD have increased their dividends so aggressively, but mostly because of the recomposition that has led to higher dividend yielding companies within SCHD. That being said, the dividend has had 14 years of consecutive growth, which is still great to see. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my SCHD position and how much it's paid me in dividends so far and every year going forward. If you did make it all the way to the end of the video, let me know down below what your thoughts on SCHD are and if you own any shares in the ETF yourself. If you haven't yet watched last week's video where I talk about my dividend income for the month of June, check out this video right here. And if you want to see my reasons for buying a bunch of Microsoft stock over the past couple of months, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.